Good morning, ladies and gentlemen. I know some ladies are watching it, and I'm happy to talk to you today from sunny and really hot Warsaw. And today we'll be talking more about risk management and understanding the probabilities. I hope you will enjoy it. But first, I'll take my espresso, and you need to know that best espresso is when you drink it with really cold, and you see I added some ice cubes here, really cold fresh water. This makes hell a lot of difference. So I'll be enjoying it while talking to you, and I hope we'll have some nice time. My first suggestion today will be during weekends just stop trading. Okay, it's not worth it. The price, even if it moves, it's not worth spend time. I'm living from trading, making money consistently since few years. I'm a retail trader. I learned everything on my own and using some mentors like Eric Crown. Cheers. And I know that it can be hard for you not to trade because you can feel that the market is running somewhere that you are obligated to participate in the market because it's constantly advertising to you, it's constantly moving. I was thinking the same. I started from, I just was wow, those people are making money from nothing, and I wanted to do the same. So I spent hours and hours. Still, I'm spending around 10 to 12 hours near the charts or doing something with trading, associated with trading, not only trading, but adding some content, making my own strategies, testing, and etc., etc., analyzing the market. But I wanted to be all the time. I wanted to have a position, and all the time I wanted to have a long or short because I thought market will run away from me. And that was the first thing I understood after years. It took me 2 years to become consistent and profitable trader, which is meaning over a time I'm making money. My equity curve is sloping up, um, and I'm a winner over time. Of course, there are weeks or even months where I'm not making profit. Sometimes I take big losses. That's part of the game. So what you want to be, you need to be a man. Even ladies, you need to be a man and take the loss and proceed forward. What I want to do today is I want to help you understand something which I think is the most important skill of a trader. It's risk management. I think I will show you, and the chart should appear somewhere here or here. I don't know. I'll add it later, but I'll show you some numbers and some charts to prove it. Risk management, and nobody will tell me it's not important, is I think 70 to 75% of a success. Because finding a good strategy, making you money, like with decent risk to reward ratio and decent edge, meaning you will have at least 50-60% probability of winning a single trade, it's relatively easy. You can just read the books, you can just learn, you can learn technical or fundamental analysis, learn how to make decisions based of it, and I'll be not talking about this because you can find it everywhere. If you struggle with finding a good mentor and good technical analysis course, down there should be some useful links with some discounts for people I think gave the best education in the trading sphere. And you'll need to invest in it, like in a school, university. You have to go through the traders university. If you want to learn more, of course, you can join the community. I'm a proud founder. It's called Nibiru Trading Zone. We learn from each other. It's free, so we have a lot of nice content. You may or not join. I suggest you do, because we're having some fun, not only trading there. But you want to. What was the most important for me? It was understanding that even if I learn everything about market will be changing constantly, because I'm one of the I don't know, plenty of participants of the market and with bigger or lower wallets. And you know that market moves only because there is an imbalance of buyers and sellers in the market. What does it mean? It means that market moves because somebody with decent amount of money have a different idea than you about what is cheap and what is expensive. So market will will move whatever you think or not, will move randomly from our point of view, because you can't as a human being predict 100% what market will do. For predicting what market can do, you can just use a good strategy. I put my own strategy and trading style in something I call, thanks to one of my French friends, um, which is called voodoo indicators. And you have a decent edge there, because it will give you 65% probability per single trade and around 3 to 1 risk to reward if you use it properly. If you want to check it out, it is 72 hours free trial of it. The link is down there. You can buy it with decent discount, because indicators are ready. I coded them. It took me a long time, but I'm still putting a proper videos for making a course how to use them, so you can buy them with really good discount, 40% pre-release. Use it. It's limited offer, so feel free. Or you may use your own strategy you're using every day. I don't care right now. My concern is that whatever strategy you are using, some of you probably are still losing money, draining your wallets, and you don't know what's happening. What happened? I lost money. I have a good strategy. I have 70% edge, and wow, and they said I'll be making money, and I'm not. I think the problem may be an understanding that even having 99% chances of winning a single trade doesn't mean it will be a winner. It doesn't mean that 10 next trades will be winners. They can be losers, because it's so 99, not 100%. So what is more important than edge, and I'll show you, because you can check it. Even 40% winning ratio can make you money over time if you're using proper risk management. So I do believe that some of you may find it a little heresy, because everybody is talking that no, risk management is not the most important, you need to have an edge, you need to proceed it. But what if you have an edge of, let's say, 80%? I don't know anybody who has it, but 80%, and you lose, I don't know, 10 trades in a row. And what's happening then? If you're putting too much money at risk per single trade, even with the best edge, you can find a streak of losers, like 10, 20 losing trades in a row, because market is market, it's random. Even if your edge is giving you a chance of winning, it doesn't mean you'll win all of those. And if you put too much money, you'll drain your wallet. That's all. You'll go bankrupt. I think somebody may already do it. I did it in my past. I think it was twice before I understood that I need to find a way to change my way of thinking. I'm I have a mathematical education, and I strongly believe that math can describe many things. But math is not only the thing here. Math will work on your favor, but you need to also to work on yourself, on your mind. That's why I said just take weekends off. Nothing will happen. I know crypto is moving 24/7, but for the God's sakes, the weather you can see it's amazing. Just go somewhere, take your girl or boy, and have some fun. It will make you feel better, and you can start Monday. So risk management, in my opinion, is about making a trade not a random event, but a planned event. So you will have your edge, but you also need to plan plenty things. You need to plan your position size. You need to plan your stop loss. You need to plan where you will be taking profit. Also, you need to know how much you're risking per trade. That's all of those things matter. And just clicking buy or sell with, and I know it can be tempting because I'm trading crypto, I'm trading forex and commodities, but with crypto many new players they can trade it up to 100x leverage, and they think that they have to put at risk more money than they have on the wallet all the time because it's leveraged. There are many times because the market doesn't give me such opportunity. I'm trading with lower amount. My position size is lower than my whole account size. Why is that? Somebody asked me recently that what is my stop loss size when I put a position like, let's say, 100,000 contracts in Bitcoin, and and that's funny because that was the question. The question he should ask was the opposite of he did. So he should ask me, what should be my position size based on the stop loss I'm planning? So to help you understand this, you need to treat stop loss like a spent money. So whenever you're taking a trade, whenever you're making it, um, you need to think of it as a money spent. So your stop loss will be the money you spend for a lottery ticket, or as many prefer, a cinema. I'm a big fan of sci-fi movies, and every time something new goes out, I want to go to the cinema on a premiere and watch it. So I'm buying a cinema ticket. I'm spending some money for it, and in exchange of probability of having a good fun. So my edge in this bet, because I'm taking a risk of spending money for something which can turn absolute shit, and most of the times it does. The cinema right now is not good, but I'm still going. So it can turn shit. So my risk is the money I spend for a ticket, and my reward will be a good show and a nice fun watching it in the cinema with friends, popcorn, coke, and stuff. So my edge will be defined by movie trailers in this particular case. So I'm watching movie trailers, I'm analyzing them, and this is the movie I want to go, they're nice. And I go to the cinema, and sometimes it happens that instead of watching a good movie, trailer consisted all the best scenes, rest is pure shit, and I'm so pissed off sometimes I live in the middle of the movie. But it happens, it's my risk. So I'm putting money on risk for probability of having a good reward. And this is the same as trading. You need to understand this. Your stop loss is money spent. So if you're not comfortable with the money you will lose on your stop loss size, just lower your position size. That's all. I strongly suggest for new traders to risk on a stop loss. So this will be your money spent, not more than 2% of your account size. Why is that? Because the trade will stop being for you a painful event. You will not feel pain when price goes against you. You will just spend money for a ticket to the cinema, you'll see this movie is shit, you'll watch it, that's all. And you'll move to the next one. But what if you spend for a ticket 50% of the money you actually own? You will be so pissed off, you will feel regret, you'll be depressed because you spend the money you could have spent for something else giving you fun, pleasure, and that will turn into painful events. But why the cinema would be something painful for anybody? It should not. It should be fun for you. The same as trading. Trading is my lifestyle. I chose it because I like the way it goes. It's really hard work. It's absolutely hard. So if you're watching it and you're thinking, okay, I'll be a trader because this guy on the screen looks cool and looks nice, find a job. It's really hard. You'll lose a lot of health. You'll lose a lot of time and money before you learn how to trade consistently and make money consistently. I had an opportunity and I'm stubborn enough to do it, but you may find something else. But if you're still in, I, I want to show you why this is so important to manage the risk on your trades. Because even with 50% edge, and I think the chart should appear somewhere here, if you get a coin and toss it 50 times, 100 times, and let's say heads you're winning $3,000, and tails you're losing $1,000. What does it mean? Tossing a coin gives you around 50% probability. Around. It's not 50%, truly. There is a lot things which can happen with your coin when you toss it. But let's say it's 50%. So if you toss it 100 times, and risk to reward will be free in this case. So you can win $3,000 and lose $1,000 per each trade, because every toss of the coin will be a trade with 50% probability, with risk to reward free, meaning for $1 at risk, you have a probability of earning $3. And just do it. You can do it whenever you want, just toss it and write the results and see on your own how this works. So let's say everything is fine. You have a fantastic risk to reward, and I can tell you that if you're, I think I'll talk about it in a minute. So you have fantastic risk to reward because it's 3-1. You have a decent probability of winning, and you should win at least 50% of trades, which will probably not happen. It's really rare, even if in 100 coin tosses to win 50% of those trades, even if you have 50%. This is called the distribution of probability. So that's why you need to trade a long time to get your true distribution of probability of your trades. And if you lower your risk to reward to lower than 1, so let's say it will be half. So for each trade, for each dollar at risk, you can earn half a dollar. You'll go bankrupt in less than 100 throws. I can guarantee you that. Why I'm telling this? Somebody asked me recently, also on our Discord channel, should he take profit before his original take profit because he's afraid that the price will not hit his level. And I said no. You should just keep the trade. Why? Because if you're thinking of taking profit before, um, you're probably not 100% convinced in your strategy. So you should first trust your strategy 100%. And if you're taking the profit before, you're lowering your probabilities, because then you're lowering your risk to reward per trade. What does it mean? Over a time, if you do it 100 times, you'll start probably losing money, even if you think you're winning, because okay, it's tempting, the profit is on the table, but this is not the profit you're seeking. Every trade you're making, it's to risk some money to gain, to have a probability of gaining slightly more, at least 1-2 times more than you're putting at risk. Because then it's not worth it. You can play all day, all week, all month, all year, and at the end of the year you'll be break even or you'll be broke, and that's not what you want. That's why the risk management is important. Risk management will consist of risk to reward, so you need to have a good setup, and for this you can use my own indicators down there, as you remember. Yeah, you can click, you can see how they work. 72 hours for free. Also, you have to manage your position size. This is, I think, the most important, because you can have 10, 20 trades in a row, which will turn losers. And if you risk too much money on them, you lose your wallet. That's why what I'm doing every time I'm putting a trade, I'm first checking what the market is offering me. I'm checking where, if I enter here, where should be my stop loss, to be sure I will not get fucked by the market, because it will try to stop me out before it goes in my direction, but also not so deep, so I will not run the loser for too long. And when I have my stop loss defined, I adjust my position to this stop loss. So this stop loss, this ticket to the cinema, will be not more than 2% of my account. So I can go to the cinema at least 50 times before I go broke. I think it's more than enough for anybody, because I don't think it's so much sci-fi movies going out nowadays. So you can go 50 times for each time for a new movie to check out if you like them or not. And this is the same with trading. I know it's tempting, because you can feel, okay, I can use 100x and be a millionaire in a second. And yeah, you have a probability of putting a good trade and it will go in your favor and you'll earn so much money. You will not know what to do with it. But most of the times, market will go against you. That's how market works. It's amazing, and I'm fascinated in the psychology of people and traders and market. But to be sure that you're not losing more, just place your bet accordingly to this main rule of a trader. And it may happen, if you use your edge, that your position size will be half of your wallet. Not even, it can be even 10% of your wallet if your stop loss is wide enough. But then you'll not lose money so fast. Also, please remember that when I'm talking about the trade, the trade is a planned event. So it's not random clicking buy or sell, wishing for a market to go in your way. No. You need to plan each trade. You need to set up everything. You need to know where you will be a man and you will take a loss and you will search for a new trade. And also, You need to know when you will take your profit. It will give you a risk to reward, and if it's lower than 2, I suggest you not taking it. And then you need to adapt your position size. So the stop loss, which is your ticket to the cinema to watch a nice chart moving, the stop loss size should be not more than 2%. And trust me, it will make your life as a trader easier, you will have more fun, and you will have more time. And I think trading is not about watching charts. Trading is about not trading at all. So you can go, and I can go to my laptop, like I can go to my battle station, look at charts, see if there are any trades to be made. If they are, I will place them. I will play my edge. If not, I will do something else. And what I'm planning today, I'm actually going out with friends. We'll be doing some barbecue at the riverside, and I don't think I'll be back at charts until Sunday evening, when I'll be planning something for new forex and commodities session. Although I know Bitcoin is moving and it's tempting, but nah, I like my life too much. So I hope you enjoyed this short video. I hope it gave you at least some insight in what I think in this handsome head. And if you have any questions, you're free to ask me in our Discord channel. There's a special channel for questions, so most of them I will answer. Even if not on video, I will answer them on Discord or directly. So I think that's all what I wanted to say to you today. I hope you will enjoy your weekend wherever you are, and I hope it will change something in your trading. And now it's time for me. So please enjoy, trade safe, and see you next time.